Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong monthly supply and resistance area. That, now that the market has broken into the upside and retested, has turned into support and demand, and the market is rejecting it to the upside. In fact, this exact same level of historical structure was acting as previous resistance starting from here, from which all these major rejections to the downside were created. Then the market broke above that zone, and all that previous resistance, as I just said, was turned support here. The market tested it as previous monthly resistance turned support and rejected it to the upside. So from a monthly standpoint, everything seems quite bullish. The market is rejecting strong monthly historical support and demand. And in a situation like this, the uptrend could be expected to continue. Now, why am I speaking about an uptrend? Because if we look closely, what we can notice is that in creating this move to the upside, the market has established an uptrend. And by definition, when you have an uptrend, you have the creation of higher highs and higher lows. Now, the previous low was here. The higher low was here. The previous high was here, and the higher high was here. Now the market just created a new higher high. So the next logical step would be for the market to create a new correction, create a new higher low, and then a new higher high. So essentially create this higher low here, and then a new higher high here. So from a monthly standpoint, what seems possible is to see some short-term bearish price action and then some more longer-term bullish continuation. From a pattern standpoint, we can also notice a clear impulse followed by the start of this correction. And in general, when you have an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements lining up exactly at this area, which we have a good probability of seeing a potential correction to before then getting a rejection to the upside away from this level. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, it seems, at least at the moment, that the market is finding support at this previous level of support and demand. Now, if here the market really finds support, that would mark the start of a range from a weekly standpoint, with the bottom of the range here and the top of the range here, because at that point we would have good probabilities that the market would be bounded in between these two levels, and at that point we would continue to see more potential horizontal price action being created in between these two levels. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, the situation seems quite clear. This is the zone at which we have structure. At this area, we have previous support, which is now turned resistance. Now, it is very important to keep in mind that until the market will remain below this resistance, this market can and should actually continue lower and continue creating bearish price action. Now, if that is the case, if the market remains below that level and creates a push to the downside, here on the weekly, we would have the creation of an M pattern. And in general, after the creation of an M pattern, what you would expect is a potential rejection to the upside, completing the M pattern at the neckline. However, if the market here breaks above this zone, at that point, this previous resistance would become support. And after a break on the retest of the previous resistance turns support, that is where there is a good probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So let's go and see what we have when it comes to the commitment of traders and what hedge funds and the big players, so institutions, are doing in the market on gold. Now, if we take here the data on gold and we look at the net positioning, what we can see is that with the last reports, we have seen a massive amount of net positions increase. We went, in fact, from having 131.1k net positions all the way up to 237.3k net positions. So a huge increase of the net positions, reaching all the way up to 284.5k longs compared to only 47.2k shorts. So institutions have been moving aggressively back to the bullish side for gold, therefore making it stronger. So as institutions are longing gold in a situation like this, what could we expect? Well, let's move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, as I was saying, in a situation like this, if we get this break above the resistance, at that point, on the retest of the previous resistance turns support, that is where there is good probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. But remember, if the market does not break above this resistance, it should continue lower, because this is by definition a downtrend. So until the market remains below this resistance, it can easily move lower. And if it moves lower, it would create an M pattern on the weekly. And at that point, I would anyway expect a potential rejection to the upside for the completion of the M pattern. But in that case, I will be reevaluating the situation after the move to the downside happens. But from here, as we were saying, if the market breaks above on the retest, there is good probability of getting more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. So if we get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the CO2 data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised if we get a potential rejection to the upside away from this support level. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.